Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry, my sound is like all messed up, so I have to fix that up here. Anyways, it's a Monday. I don't know, man. I feel a little bit directionless after that non-farms payroll. We could see some interesting stuff. Also, today is Columbus Day, right? I don't know. Let's come in here and look. Pretty sure today is Columbus Day. Yes, it's a bank holiday. So even though I can see here that the CME is up and you can take trades, apparently the options pit isn't open or something like that. Anyways, let's just go down through the charts, figure out what's going on. So you can see on Wednesday, equity markets just kind of chopped around. Did end up lower, and in the overnight session they're lower. You can see the treasuries got just killed off of that news. Initially they moved up, which I thought was the correct move, but then they moved down. Now many have suggested that it moved down because the participation rate and everything else in that jobless number, non-farms number was actually really good. But I don't know, man. I think we're still kind of in a questionable area. And having pierced through 131 even, that's like pretty aggressive of move. I'm kind of starting to wonder if they've gone too far, but not something that I'm going to trade on today. I'm going to let them figure that out. Why did I click that? Okay, coming back over here. Oil. Oil moving higher, man. Like, even though Russia said that they were going to help with energy, like Gazprom, the Russian company, basically is like, well, we've got to shore up all of our supplies first. so that's taken off. But natural gas is actually down this morning, so that's good. And silver and gold. So silver and gold took a big jump off of the non-farms number, but then came all the way back. Copper, and that's this morning. What about in the currencies? Well, 60. So the dollar index is a slightly weaker. They got weaker off of that report on Friday. And then Bitcoin took a pretty good jump up last week, but I don't know. I mean, they're still pushing, but what I see in Bitcoin is that move is concerning to me. That move is a little concerning to me. So anyways, so since today is a bank holiday, I think that we could maybe do a little bit of work. So I have to go in. Well, we'll keep an eye on this, of course. But let me come in here and see if I can find, if I can recall what is the next thing that I wanted to work on. All right. So first thing here is let's fix, it's that is broken. So we gotta kill voice meter banana. Shut it down. There it is. Die. Okay. do that. I can see the treasury ticked up. I don't know. Liquidity is not too bad, but it is a bank holiday, so let's see if that fixes my sound here and just pull something up here on YouTube. Cool. That works. So let's turn on Financial Juice. There we go. And let's just take a quick read here through. Yeah. Bank holiday in the US today. Futures are operating under a normal schedule. Cash treasuries are closed. Oh, okay. It's the cash treasuries that are closed. Gotcha. 70% of all Bitcoin trading takes place in Tether, according to new research from Paris crypto data firm. That's troubling. Wait. Wow. Kraken gets trolled by the Bank Policy Institute. We contacted Kraken customer service and asked what cash equivalence means. We were told stocks, bonds, and mutual funds. What? Oh my gosh. That is, a stock is not a cash equivalent, buddy. Are you kidding me? Oh my gosh. Okay, so let's come over to our list. Can I get, there we go. Okay. Oh, yeah, that's right. I totally forgot about that. Well, we can do that one. Okay, so I did a little bit of work on scaling out sort of stuff that I can show you guys later. I'll show you guys when it's a little bit, when the stream is a little bit more active. And when Ace is here, I'll show him. Because it was a little interesting. But I need somebody to check my work. Oh, I forgot that I wrote that. Oh, you know, that's a good point. Good question. I did the risk center. I'll turn the robot on. We'll do that. We'll do that and see what it does. If he takes a trade, that is, of course. Could work on the volume meter. I don't know if I'm really feeling that one, though. ELT interest rates versus the S&P 500. What do you mean? Would you rather be in interest rates right now, or are you talking about like trading it in general? Note cash market closed today. Oh, the pros and cons of trading the two. Okay, gotcha. Okay, so the advantage to trading the S&P 500 is, one, it moves around a lot, and two, it has a tendency to move up. The disadvantage of that is that the movement becomes quite random. So you're going to notice that technical indicators and strategies seem to work better on individual stocks than they do on the S&P 500, at least on like short time frames. A lot of the people that I see making money from S&P 500 futures are taking like super tiny targets that are like less than the natural noise of the market. So you're basically your noise trader, right? You can get like good fundamental trades, but they're a little bit less common, and even then there's like a lot of like whippy action around them, right? Treasuries, on the other hand, treasuries are very economically sensitive, and they move quite intentionally. So they're really good at like stopping you out at exactly where they'll go stop out and then go the direction that you wanted them to go. Treasuries do that all the time. But there's a lot of mean reverting kind of behavior in the treasuries because of the spreads and everything else. But then when it does get moving, it trends hard. And again, since it's so economically sensitive, so the advantage in the treasuries is that it's a lot easier to get a context and put yourself in a trade and just hold it, right? So even though the runners aren't as far as you get in the S&P 500, if you get good at treasuries, you can be incredibly consistent. But the big downside to the treasuries is that they really are like a more efficient market. Like the people that you're trading against are just better. And so you have to be better. And a lot of the things that retail traders rely upon, or kind of, the falsehoods that they have, you'll get away with them in E-minis and crude, and you won't get away with them in treasuries. Treasuries will come and humble you like right away. So I feel that if you're going to be scalping futures, that you probably want to have both in your repertoire. I'm sure most people are going to gravitate towards E-minis though. It's just, but I do very much like the treasuries, and the treasuries is actually a very, very deep market, meaning like the number of things that you can learn and so forth. There's a lot you can learn. I need to get this a little bit closer to my mouth, I think. So yeah. If you're just starting out, my recommendation is always start with the 10-year treasury, trade that for a month. Trade that for a few months until you think you know what's going on, and then go and trade the E-mini. Because you'll learn so much if you learn the treasury market. And when I say learn the treasury market, I mean like know what every economic report does, learn how they price these things. that sort of a stuff. Oh yeah, another disadvantage to treasuries is that there is a lot of the market that you just can't see. Like in the S&P 500, you could maybe go and get, you could get data from your broker and you could look at every S&P 500 component stock and see what they are at the time and try and compute the index yourself and do arbitrage. I mean, you probably wouldn't make money that way because you wouldn't be competitive, but I'm just saying, like, it's possible for you to do that. In the treasuries, you're basically going to need a Bloomberg terminal because you're not going to have access to the cash market. Well, I suppose that you might have access to it in some other applications, but it's different. It's different data, and most people don't have it. This is another disadvantage. Well, the idea is, so far, the treasury market has been as expected. It's just really tight. It's really tight. Anyways, I need to make a video about that. So I did a little thing with it within R, and I kind of like recorded a video and didn't put it up. Done that a few times where I recorded a video and I was like, I didn't really like it and didn't put it up. ECB's lane, the medium-term inflation dynamic is too slow, not too fast. Oh, that's weird. What is the most searched Halloween candy? And it's candy corn in most of the United States. I'm not a fan of that stuff. Weird. Anyways, I was browsing Twitter, wasn't I? Yeah, just Bitfinex doing stuff. Has our robot taken a trade? Oh, it says that he should be long. Okay. I wonder if I use that imbalance as a filter. 84% of Trump voters are worried about discrimination against whites. I'm surprised that it's that low. There's Salim. How are you today? We're just kind of chilling right now. I don't know. Well, I mean, the Treasury did move down there. I don't know, man. I'm like being at 131. Or because on Friday I was like, I think maybe we should go back to 132. Nope. Guess not. Guess not. Future slide is soaring. Oriole nears $85 is what the top story on Zero Hedge is. Well, they are down. I don't know if you can just buy the dip today either. I compared CQG data with TT. It seems CQG has missing data, as you said. Checked Sierra's new Denali data co-located server. Oh, yeah. But I overheard them say that they are not even sending over half the data from the CME. I don't know. I mean, the question would be, in what circumstances would the updates that they're not sending to you matter? You know what I mean? It's like, it would be really difficult to sort that out empirically, right? Like somebody left a comment to that effect on the video, and I was kind of thinking about it. I was like, well, like, how would you know? Like you would have to be able to like time travel or something. Know what I mean? But like knowing where those particular differences made a difference to like your strategy or whatever is kind of, you know, it's not something that you would necessarily see in real time. Like you could see, yeah, that there are differences, but when would that difference be? Faster it gets, the bigger the volume, the more important, I guess. Maybe. Well, I think what we would see, right, is like if we had like a metric that was like number of updates per second, then probably what we will see is there's like an upper limit to it. You know what I mean? Like we would see, okay, why is it not? Move that over. I don't want to take any trades in that today, so it's not working. Oh no. Maybe if I close it down and reopen it. Exit Epic Pen. There we go. That and that the CQG just doesn't send you all the levels. That's another part. That's another point. There we go. You get like, you know, here's a spike, and then there'd be like a, you know, where it's like actually the number of messages per second was even higher than that, but CQG was filtering them out so you couldn't see them. It's probably what you would see. You would still get fairly accurate readings about what the resting liquidity on the DOM is. You just wouldn't see every little change that led up to it getting to that state. I'm not saying it's bad, it's just not perfect, yeah. Well, I'm pretty sure that trading technologies is the best in that respect. It could be wrong, but I don't know. Like, even though the treasuries were like sitting down there at the bottom and everything, it's a very slow market this morning, isn't it? It's a very slow market this morning. Where did my Evernote go? Closed it, didn't I? Oh man, I got the marquee scroller to work, but I couldn't get it to work with the Wi-Fi module, so I I had to give up on that. And I bought a new thing that will allow me to do it. That's completely different. But now I've got this old one and I don't know what to do with it. I got this LED board over here. I don't know what to do with it. Yes. Okay, well, I did Granger causality, do a Markov model. So I remember somebody on Futures.io posted something about sell it. Well, who would buy that? I don't know. Maybe I need to find local Arduino Raspberry Pi groups in Utah and see if there's anybody that wants it. Because I don't have anywhere to put it. If it was waterproof, then I could put it outside, but I since realized that the thing that I was starting with was kind of like the big issue, well, not the big issue, but the limitation that you run into with this sort of hardware is that it's the memory. So basically, if you want to have like complicated animations and everything, there's a limit to how much you can put in because of the memory and storage limitations on the device itself, because it's a teeny tiny little device. So moving from an Arduino to a Raspberry Pi really expands what you can do with it, essentially. Taku Porto, hey, how are you? Thank you for subscribing. Yeah, anyways, so what I decided to do was instead of doing like these NeoPixel strips, I'm going to get these little 32 by 32 matrices. So it will actually be much higher resolution. And I don't know, we'll see what it does. We'll see what we can do with it. And it should be a lot easier to put together too, because it's basically like, I mean, there is some soldering, but it's a different kind of soldering. So that's good too. I guess maybe I should give it to Everett and try and convince him to program stuff for it. All right. What is this? I wrote this down as something I wanted to test, and I don't have no Topowitz inverse covariance based clustering of. Okay. Well, I get a bunch of scholarly articles about it. Subsequence clustering of multivariate time series is a useful tool for discovering repeated patterns in temporal data. Once these patterns have been discovered, seemingly complicated datasets can be interpreted as a temporal sequence of only a small number of states or clusters. For example, raw sensor data from a fitness tracking application can be expressed as a timeline of a few select actions, i.e. walking, sitting, running. However, discovering these patterns is challenging because it requires simultaneous segmentation and clustering of the data series. Furthermore, interpreting the results clusters is difficult, especially when the data is high dimensional. simultaneous segmentation and clustering of the series. Furthermore, interpreting the results clusters is difficult, especially when the data is high dimensional. Here we propose a new method of model-based clustering, which we call Toeplitz inverse covariance-based clustering. Wait, is that what I... Inverse covariance-based clustering. Oh, okay. Each cluster in the TICC method is defined by a correlation network or Markov random field. Oh boy, okay, this sounds like it's already getting more complicated than something that I could just program in this stream. That would require a lot of study for me to go through and do. Characterizing the segments and clusters, the time data series. We solve the TICC problem through alternating minimization using a variation of the expectation maximization algorithm. We derive closed-form solutions to efficiently solve the two resulting subproblems in a scalable way through dynamic programming and the alternating direction method of multipliers, respectively. We validate our approach by comparing TICC to several state-of-the-art baselines in a series of synthetic experiments, and we then demonstrate on an automobile sensor dataset how TICC can be used to learn interpretable clusters in real-world scenarios. Oh, that is like a really crazy... Wait, do I have this? Download PDF. Boom. Yes. Okay. Let us save that for sure. But I think that's going to be for self-study time. Right? Trading, learning, Q. I'm going to rename it here. Toeplitz inverse covariance based clustering. Man, Treasury is still just sitting there like, look, nothing. Look at the number of level 2 updates that's happening in the Treasury market right now. Like, nothing is happening. More there about how it's closed. Well, I think that I want to go and I want to try and incorporate this machine learning library into NinjaTrader. So I saw something on Futures.io about doing that. ELT, yes, the banks are closed today. Well, so the futures markets are all open, but the treasury market, the cash treasury market is closed, and none of the banks will be trading. So even though you can, excuse me. So even though you can trade, there's probably not going to be a lot of trading activity, right? Okay. Machine learning. Dum, 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 dum. Is this it right here? Nope, that's not it. There's our machine learning. Anwar, how are you guys doing? If there's anything that you would like us to study or backtest this morning, you let me know, because I'm pretty open. I thought I saved the URL of it somewhere, but it's not in any of my Evernote notes, at least. I swear it was on Futures.io, though. Oh, here we go. TensorFlow. That's what I think it was. Okay. NinjaTrader 8 plus Visual Studio third-party DLL dev approach. See my thread here. Now, a lot of his information is in a video. Doesn't look like he did much with it, actually. Yeah, how interesting. He made one video like a year ago. It's a code repository. Okay, well, let's see here. With Jigsaw, is there a solution to execute the same order in 2 accounts at the same time? Oh, I don't think so, but I think theoretically you should be able to connect to 2 accounts, and you could put 2 DOMs next to each other and just click them both and manage both accounts, very easily. You could start by one button click and it sends it to both places. I don't think they have that. I mean, I don't think anybody would have that, really. Okay, so let's start out by getting TensorFlow. When's the risk control going to be available? I put it somewhere, I thought. Didn't I put it in the downloads channel? By the way, it hasn't taken a trade yet, has it? Oh, no, it has. Look at that. It works. It's working. It's working. No, actually, that's not right. That is not right at all. We are going to need to go into the code, because it's doing the exact opposite. It's the exact opposite of what it should be. Okay. Oh man, here it is, Risk Center. Because Jay is short. He's made $37.50 to $50. And so he's making money, and that is showing up as using part of their daily loss. So it's backwards, right? Okay, so daily loss limit.cs maybe? calculate account item event args E account item if E account item equals account item realized profit loss realized equals E dot value. If it's unrealized profit loss, current divided by value. Aha. How do we do this? So I can see where the error. Oh, you know, you can. I don't even have the code up over here, so where you can see. So I'll explain where I made the mistake. So what it's doing here is on the calculate, it's getting the count item event args correctly, and it's adding the E value, which means that this realized if you've made money, then this is a positive number. But in the risk center, this is like, you know, the daily loss limit should be 1,000. Should be a negative 1,000. Can I put it in here like, can I do it like negative like that? No, I'm not allowed to put a negative value in it. Oh, because it will only take in 0 through 9. Interesting. And I told it to do that. Oh, it's so funny when you go back and you look at your own code after several months, you know what I mean? But I think that's what we want to do. So I think that what we want to say is like your max limit is 1,000, but it should be, you know, if the daily loss limit is positive, if you've made money on the day, then that should just say 0, right? What do you think? We've made money on the day, it should just say 0 right there. Is what I think we should do. I'll wait and see if there's any comments. Because of this, what you guys think matters a lot to this, because this is for you guys, right? By the way, did I put it in the I swear I put it in the Discord, but let's double check. No, maybe I haven't. I don't know. Yeah, okay. Anyways. So in here, current equals realized plus E dot value. And I think so. The other issue is this used anywhere else? Okay. It's only used there. Feeling really wishy-washy about how I want to do it. Part of the issue is that this is all super clean. You just got a long signal on ES? You get your, I don't know. Remember that today is Columbus Day. But when you get, we want to go, I made a spreadsheet, and I want you guys to check my work. But I want you guys to be able to look at it too, see if we got it all correct. You mean Indigenous People Day? Yes, that day. I'm going to leave it as a positive number, and you're only allowed to put. I should do something like math dot min 0 comma negative e value, like that. Actually, let's not do it that way. Let's not do it that way. Your skill set? No, but we got to check my math, I suppose. There's you. I'm surprised you got it that easily, actually. Well, I don't know. I guess it's so easy to make 2 points these days, isn't it? It's really what it comes down to. I actually wonder why you haven't increased your take. Like 3 instead of 2, because the market definitely moves further now, right? Well, I'm surprised that it was that quickly. Because the market is so effing slow. Like, the thing is I can kind of tell too the days when it's kind of going to be a little problematic. Okay, well, let me show you. That's I'm gonna have to rebuild that. I have to shut down NinjaTrader. I don't want to do that right now. But let me show you the spreadsheet, okay? Yeah, okay. It's just gotta start up here. I need to turn off some of those Excel add-ons I'm not using anymore. Okay. So here's what I did. Can I make it all bigger? Yes, I can. Okay. So I went in and I made a little, hold on. New squawk talking. Okay. So I went in and I did a little probability. Okay. So this formula right here, maybe not worth worrying about too much, but basically what it does is it calculates the probability given a random market of you hitting a given target with a given stop, right? So if your target is closer than your stop, then your probability can be above 50%, right? See what I did there? Okay. So then I went over here and I said, okay, what is the expectancy of these, right? So if I come over here, the probability, oh, I need to move over a little bit. Okay, so the probability of you getting immediately stopped out should be 45%, right? So that means like if I come over here, how do you know that equation is accurate? Because that one I pulled out of my notes. We could sit and do the algebra if you really want. I think I threw away the piece of paper where I did the algebra, but basically what I'm doing is like, I'm saying that your expectancy is equal to the probability of a win times your average winner minus the commission plus probability of a loss. Well, actually minus probability of a loss times the average loser minus the commission, right? And then you say that all of this is equal to 0. It is on the table for places that things could be wrong for sure. So here's where I would say that I think that, well, okay, so let's say that the target was 12 here. Probability is 0.5, right? So I'm pretty confident on that one, on that part. Okay, so, but the more important thing is the logic, right? So if you're taking a trade here where you're taking, let's see here, you're taking 2 points, right? So you've got an 8-tick target, but then you've also got a 4-tick target. Then 0 is where you got in at. And then you've got an 8-tick stop, right? And then you've got like, let's say that this over here is like 40. Let's say that you take 10 points off of it or something like that, okay? In this particular case, I've changed it so that we're doing 10 and 12, okay? Because that's what Futures Trader 71 was recommending, okay? Anyways, so in this particular case, the chances of you getting your 4 before you get your 8 would be like 70% or something like that, right? Okay, so in this case, the chances of you getting of you hitting your 10 before you hit the 12 is 45%. Okay, so 45% of them will move on, essentially, right? So then we look at which percentage of them will get to that first target and then stop out, right? So that's where we say at this point, we've made, now where did I put that part? Okay, so, and this is showing you what happens to the lots. This part right here, right? So scenario 1 is all 3 lots stop out. Scenario 2 is you make 10 ticks on lot 1, you lose 12 ticks on lot 2, you lose 12 ticks on lot 3. Okay, so your P&L is 14. Okay, but because you've already moved up, okay, your stop is 22 and your target is going to be 8. So here again, so we have 0 and 10. And then I think the second one is the second target, which is actually a lot higher than that. The second target is 20. No, it's 12 plus 1.5, so it's 18. Yes, that's right. Okay, the second target is 18. Okay, and the full stop out over here is 12. Okay, so if we've made 10 already, if we're right here already, then our stop is 22 ticks away and our target is 8 ticks away. Make sense? So once we've gotten our break even, it's much more likely for it to go up to our next target than it is to go and stop out, right? So here we calculate that again. I should do it with the calculate that again, right? The stop is 22, the target is 8, and the probability of that happening is 0.74%. Okay? One should move their stop as soon as those first targets get hit. Okay, so that's a fair, we can go back and we can do that again, for sure. I have it set that you don't move it until you get the second target. If you moved it, and let's see how that would change it. So if you moved it, then yeah, interesting. So you're saying if this 0, 10, and then 18 is the second target right here, and then the full stop out is 12, you're saying that once we get to here and we get this filled, that we should move our stop to break even. So then our stop is 10 ticks away and our target is 8 ticks away. Yeah. So if I just changed that, what is J2? J2, J3. Yeah, we would just change this. This will be, it'll just be J2. No, it'll be J3. It'll just be J3. 10. Okay, so if it's 10 and 8, so we're going to do it your way. Yeah, well, we have it set up so you can change them, right? So we'll show you when we change it, okay? Well, actually, let's change it right now. So we're saying that our risk unit is 8. And our scale unit is 4. 4. And our target unit, that's still 1.5. So that means that when we get 4, oh no, this target unit can just be 1. There we go. Okay. Okay. So we're saying if you did a full stop out, then you would lose 8 ticks on each contract. If you got the first one and then the other 2 stopped out, you would get 4 minus 8 minus 8. Oh no. You would get 4 0 0, right? First target, then stop out would be 4 0 0. 0 0. And if you got this one, that would be 4 8 0, and this would be 4 8 40. That's like the full win. Okay. So it's saying here that the chance of you hitting that first target and then stopping out. Are you going to get in and do the opening? Okay. Here, I actually, I don't know if I like that, to be honest with you. What did we have? Oh, I don't even have it over here. We'll see if I can get the 8, okay? That looks more, yeah. Well, here's the thing. This number right here is the number we're looking at, which is like, on average, given a random market, how much you should make per trade. I don't know what it should be. I would have thought theoretically it would be 0. But what it's saying here is that what you lose when you get the full stop out is not made up for by what you get when you get your runners, essentially. So basically, the setup that Futures Trader 71 recommended is it's not the most efficient set of targets and everything that I saw, but it's pretty close. Seems to make sense. See, with the way that Futures Trader 71 does it, all of these probabilities for each step ends up being above 50%. See if I come back. Well, there was the whole, we changed that bit, but see, he's saying go for a target, go for a stop of 12, scale out before you get to 12 on the other side. Target unit is 1. Oh, that's interesting. Basically what it ends up being is like, the more you scale out at the beginning, the better chance you have of it working. So it's basically like, well, we'll wait. I'll try it, okay? We'll wait and I'll try it. So I'll turn this off. Take it 1. Okay. Okay. So like that, got 3 of the contracts filled, and then you let the rest ride. And now I move my stop to break even, and I'll have my target be 86. I'm trying to be somewhat random here. I said go long on the open because equities tend to go long. I have no clue if it's going to be long today or not. Maybe it shouldn't be to 72. Maybe it should just be to 80. That would be equal. They're gonna go touch it. Pretty, we're in an area where it's too wild. Probably, huh? Like, I think I would need to scale more contracts. Maybe. Okay. Now there's no chance. Right. Yes, might be showing that holiday feeling. I don't know. Yeah, probably. I mean, it looks like there's going to be a buying day today. The treasuries are moving up, by the way, which is kind of interesting. Yeah. Yeah, it's looking a little mean reverting here, isn't it? I'm giving myself a fair trade though. So when I go through and I do all of this though, like the main conclusion that I come out of it is that, well, so number one, if you can set things up so that your next target is always closer than where your stop out, then you always have the probability in your favor. So that's good. And you're kind of scaling it out with multiple contracts so that you're really only taking like the real risk at the beginning, right? Maybe for the first two. Okay. But then the other key is that the place where you really lose money is the immediate stop out. So if you can avoid the immediate stop out, then that's really the important thing. So you really want to be catching like some momentum right away. And probably like if you don't start getting fills relatively quickly, you're going to want to take it off. So you got 78.50? Okay. Now, another thing that was different about his was that I think that his target was double, which you can see makes your profit per contract a little bit less than. And then he didn't really say how long your runner was, so I just said, oh, let's say you get 10 points. I think the closer that is, like if instead of 40 points, we said you're going to get 36. Oh, it actually made it worse. But see, this is where I say, do 1.5 instead. So that you get that second target is better than 50%. And Treasury ticking up again. I think 131 is very, actually, well, nah, I'm not going to, I'm so tempted to take it. I really think that they're going to go up there. But as a holiday in the treasury market being closed, I don't know if that really makes much sense. Ooh, almost. See, this one is taking a little bit too long to get to the 38, 43, 80, 50. So, anyways, the way the spreadsheet works is, okay, so there's the probability that it will immediately stop out is 45%. So 55% of the time it will move on. So the rest of these is equal to 55%, right? So then we say, okay, 56% of the time of those, it will stop out. Or not 56, but 44% of the time it will stop out. Okay. So that's 1 minus that's 44. So that's 44 times 55 and you get 24% of the time, right? and then the amount of time, the number of times it will get to the second target and then break even. So at that point, the target is 22 ticks away and the stop is 28 ticks away. That's 56% of the time. So 56 times 56, and you get 13.49. Good pullback buy. You got it. There you go. Good job. Oh, that one came through quickly, didn't it? Not quite to my target. You know what I should do over here is I should make another column. So this is a little easier. 1 minus this. 1, no, equals 1 minus this. Equals 1 minus this. Call this prob win. Prob loss. Okay, so what my numbers are saying is this. The most efficient way of scaling out is to have one where your first scale out target is pretty close to your risk, but not quite there. So in this case, and I really think based on the average true range and everything that probably this is correct. 12 and 10. 12 tick stop, 10 tick target. And then your next target is at 18, and then your last one, your third contract after that is you let it ride. And if you were to add more contracts, it would probably be better, at first at least, for those first contracts to scale out first, right? Because the thing that where the losses come from is the immediate stop out, right? Once you get to here, it's like it's free ride. So you want to get to here as quickly as possible. Now you could say first target and then, or you get to the scale target and then you move your stop, but that would decrease the probabilities below 50%. So you don't want to do that. That's basically the gist of what I'm getting at. Though I find it interesting, though, that these winners don't make up for these losers that you take on the initial trade. Like, the overall expectancy of it is still negative. You know, so you really got to have some, basically, for this to work, you need to have enough edge that this immediate stop out happens less than 45% of the time. So load up contracts close to the entry. Yeah. So if you were to insist on doing the 8, you know, if I was to add a fourth contract, I would probably take 2 of them off at 4. That seems to be what works better. He says I can agree with that. I was trying to make it so that this would become a graph, but This is a little too complicated to do here in Excel. Maybe I should go and put it into maybe put it into R. I don't know. Anyways. But again, the key is you gotta avoid that immediate stop out. He says agreed, you need better than 50% edge. I wonder, well, I could go back and try testing a few things again. Let's. Well, Ace is gonna go, so I guess it doesn't even matter. Here's your 10 points for breakfast. Yeah, that was 10 points. It was good. I think for me, the way that I took it was kind of lucky, right? Like the only real edge that I had there was that S&P 500 tends to move up. So the way that I did it probably doesn't have a long-term expectancy per se. You have maybe some ideas though. Maybe some ideas. Oh man, Jay caught a winner. He caught a winner. And his thing is saying to not get out yet. It says don't get out yet. So we'll see. Instead of doing C2 times 1 minus C3, it should be C2 times this. There we go. And this one, oh, yeah, is what's left times N4, which was this one right here. Yeah. Then I calculated how probable is that one to win. Well, why isn't it positive? Is it impossible to get that positive? Probably. Theoretically, I suppose theoretically speaking, in an efficient market, it should be impossible to get that positive. But I would have thought that it would at least come close to zero. That's where I'm like, there's got to be an error in my logic here somewhere. Maybe I should put this on Futures IO. I don't know. Maybe I should just ask FT. Well, how far do we think that this could go today, huh? The top post on TradingView is let this be a warning to all crypto traders. Do you stream? I stream live every day. 4402. Okay. Yeah, that seems reasonable. I got out at what, 86? That was just based on a straight target. So, yep, we stream every morning and I start at 8:20, 8:25 Eastern time. Because that's when the treasure market opens. Well, Jay's still got it. He's still got it. I don't know. I don't feel 100% comfortable with where Jay took his trade, but it worked. So more to the point, I think that I could use this scaling strategy with Jay, and it would probably work pretty well. But the issue is still when Jay it will try fading the move. That happens. So probably he needs a better filter that's like if we're X below the open or something like that. We could just do it just a well, I still want him to be able to catch the dip. I don't know. I wish there's this whole thing where it's like, you know, probability of informed trading. So like he'll take the trade when there's flow going against him. There's a certain amount of flow going against him. I don't know. So anyways, you get a certain amount of flow going against him, but like how much flow going against you is okay, right? How much flow going against you suggests that like there's a really, they know something and it's just a really bad to try and take a trade there, you know? Well, I should change. Where is it? Strategy analyzer. Call it scale out. There will be one. One and star. Stop ticks are going to be 12 on all of these. And the target on this one is going to be 8, 18, 40. And make all these OCOs. Ooh. I clicked OK on that, and Jigsaw's kind of stalled on it for a second there. Man, Jay still has not gotten a signal to get out. Yeah, I was saying 4405, right? So I think they probably have a little bit to go. I saw you got banned yesterday, Captain Price. Keep that one up. Oh, on Futures IO. Unless I have you confused with somebody else. I'm pretty sure that. Oh yeah, okay. So when I was seeing all that stuff, I wasn't sure if that was you originally, but now I got in, but then I realized what was going on. I was like, oh yes. I don't know. The thing that's funny about all of that is that, well, so one thing is, on that thread, I kind of felt like they're being a little weird, because it's like, yeah, you can post about it, but you can't post about it too much. But I don't think he understands why he got, not Vlad, but the person they were, so there was somebody that was banned from Futures IO, and they thought that it was unfair. But the reason that they got banned was because they were self-promotion. So like, if I went on to Futures IO and I said, hey guys, I have a new version of my indicator package out, then that would be self-promotion, and they would remove that post. Right. That was the thing. So he came in, and people were complaining about his service, right? So then he came in and made a post defending himself. And one, he was extremely rude in that post. But then number two, he said in there, he tried to promote himself in that post too. So they immediately banned him. And he thought that was unfair. And then he's like, how come Seth is allowed to post? Because I didn't post anything self-promotion. In fact, it was like when this stream started out as a journal there, right? And once it became like its own like YouTube, they, like there was actually like I was posting content and stuff. They said, okay, like now you can't post here anymore because that's self-promotion. It's just a little tug of war there. Well, I don't 100% agree with everything that Futures IO does. That's for sure. But like, I don't know. I've been doing like the social media stuff for a long time. You notice that it's very rare that we have problems over here, right? And there's a certain way that I do it that just like really, really works. I'm surprised they won't delete. Well, I mean, I don't think that no, because there's way too much information there. Like, honestly, if you want to know what was going on with that guy, that's where you're going to go. There's a reason that he's so upset. It's because it's like the top Google search result. I saw you over there talking shit too, Vlad. I saw that. I'm still thinking about how mad I am about that, but I'm not mad enough right now. Futures IO. Well, this can happen on any forum, right? Like seriously, unless you went and you made a trading community that was like, you have to show me 2 years worth of broker statements for you to register in this community. And then, you would probably have like 5 forum members, it would be ridiculous. But this is what I'm saying. Like, again, when you're looking at information and you're trying to judge the veracity of information about trading, don't rely upon the natural heuristics that our human brains want to turn to, which is primarily looking at other people and seeing how they do it and finding somebody that does it well. Rely on empirical evidence. In your estimation, was he allowed to defend himself? Yes. Well, if he had gone in there and he was, 1, not abusive towards other members, and 2, did not try to self-promote him, he would not be banned. Like, straight up, they wouldn't have banned him. Abusing other members, I don't know. Well, I think that the problem there on that one, let me ask you this. Because you've been talking to him, have you ever been compensated or been offered to be compensated for anything related to AlgoBox? Abusing other members. So I think, okay, you say no. I think in your case, the reason you got banned was because they basically said stop posting in there, and you posted again. But you may have also, like, did you see that email that he sent Mike, that Mike posted on there? Like, yeah. They'd be pretty mad. You have that email? I don't know what you're doing. I'm like, I was kind of surprised. I'm like, why is he, what is going through his head now? Has Captain Price just been trying to gaslight us this whole time? Or is he just, really, really trying hard to give everybody the benefit of the doubt? I'm just playing both sides. Oh, man. I went and I watched that video because I have to make sure that if there's anything that I have to do to cover myself legally in the future, right? And I don't get how anybody could stand listening to that crap, man. It is just like, oh, like, here's the thing that I thought was the funniest going through that video. Like, number one, it's like everything that he says is really just geared towards promoting himself at some point to try and convince you to buy his product, right? So he's complaining about Futures IL, and he's going through, so here's what happened in the thread. Here's somebody posted this glowing review of me, and then he reads out the full review and how great of a review it is for him. He neglects to mention that on the next page, that very person that wrote the glowing review of him rescinded his entire review and said, no, actually, I was wrong. This guy is a total douche. And that happened twice. Both of the reviews that he read, like, full out, in his video, were both rescinded by the poster later on. And then the whole time it's just like, he's trying to, I was like, how does anybody stand listening to this? Like, that the whole thing is just like a giant infomercial, right? Yeah, we're talking about Vinny. Well, there's no point. Yeah, it's just so. you would think that would just be the end of it, right? But knowing this guy, and then the other thing was like the video thumbnail and everything for the video that he made was like very had a picture of Peter Davies like saying that he was a clown. I mean, I don't think that Jigsaw is they just don't want to do anything to do with it. I told Peter, and he didn't even want to know what was in the video. So I don't know if they do anything, but like it was like a pretty brazen escalation. That's not nice. I don't know, man. Like here's the thing. I don't think you should be putting out indicator packages for $1,000 a pop or whatever. Like I think that's kind of exploratory. Generally speaking, for like indicators, the price is high because at least high compared to like the amount of effort that goes into making it, because you don't sell that many of them, right? If you have this huge indicator package and you maybe sell like three a month or something like that, then you're adjusting your price to make up for that and not for like the development costs. And that's why that's why almost all NinjaTrader things end up being overpriced, right? So there, that aside, if all he did was he just said, here's my indicator package. He didn't attack anybody. Okay. He didn't make claims. He didn't say, oh, I'm the most profitable person all the time and all of these sorts of things. He wasn't abusive towards other people on the forums. He wasn't trying to break their rules, but through self-promotion, and it would be fine. Right? Like the problem is all, just his ego, that he can't help but say, I'm the greatest person ever. And that's why he gets himself in trouble. Well, yeah, my indicators are $5 and we have a couple of people that use them. I feel though, so when I put that out, it was kind of started out, or at least I wanted to do it as a little bit more of a market test. So it was, okay, so if I put this out, just like how many people will actually try it, how many people will actually get it, and things like that. So I can get some numbers of like how many tried it and how many converted over to being a subscriber and how long do those subscribers stay. So there's a few guys that have been using it for a while. Some of you guys that are here on the stream, like Ace, he hasn't given it, but if Ace sent me, if you installed it and gave me your machine ID, I would enable it for you. Yeah, I forgot you had some. Sorry, wasn't it? No, I know it wasn't. but anyways, to your point, would people be more interested in it if it was like $50 or $100? I think so. Although I wouldn't charge people $100 a month. No way. I think the most I could justify on a monthly basis trying to sell it is maybe 20. Because I don't think that it's not realistic to be asking as much as they would pay for like their monthly trading license from their software, for instance. Right. So, did he get out? Oh no, he's still in. Jay is still in. Anyways, but when I go through my metrics and everything, because I think that I need to do better with it, because even though I think there's like some really, really useful indicators in there, it seems to me that people have a hard time understanding what they actually do or seeing the value of them. And so they kind of, they just kind of install it, try it out, forget about it. So what it looks like happens most of the time. Wow, our margins is 13,000 for 1 ES. What? Which lawyer is better? The one that charges $20 an hour, or the one that charges $250 an hour? Well, yeah, but did you get the point that I was saying? Like, are you going to pay more for a monthly subscription to an indicator package? Or are you going to pay more than you're paying for the platform itself? I don't think that there's any indicator package that you could possibly put together that would be worth more than the platform itself. Or rather, the indicator package that actually would be worth that isn't going to be put on the market, right? Why would you put that on the market? Would stop working. You still need to start trading on NinjaTrader. Well, you're not using NinjaTrader? Oh, I guess with interactive brokers you could be. You're using Ninja and not interactive brokers. Okay. Yeah. Did you see my video about data feeds? Because that's kind of what I'm talking about there. Like, the whole issue with data feeds right now is that if you want to use NinjaTrader, you basically can only use CQG now, which is kind of a problem. I don't know if it's ever going to change or what. Oh, you have some funds in there for Ninja? Did you get moved over to their FXCM? Oh, you're not even getting the full market depth. You're just getting the... Okay. $8.12. I opened a brand new account when it already transitioned. Oh, okay. Yeah, the whole transition thing was kind of weird. Well, I'm disappointed because when I asked them, they were like, well, we're not moving people over to Rhythmic yet. But maybe, they kind of led me to believe that maybe after they became their own FCM, that it would be possible. And no, it's not. And so now I'm sitting here like, well, maybe I should leave. But then I go and I look at Jay and he's made $1,200, and I'm like, well, yeah, but maybe. Although if I was going to do that with Jay, I still think I would want to do a combine again. Yes, Ninja Brokers does ACH deposits, which is great. So you don't have to do a money order or any of that anymore. And it's a little bit better of a user interface for it too. So it is better in that respect. I just let us, if there's two ways to solve this, right? Either NinjaTrader starts offering Rhythmic, or two, you just stop using NinjaTrader altogether. I mean, what else? What else can you do? Oh, no, you mean to get money out. Yeah, I think it's the same thing, yeah. It's a ACH. That's funny because I I've had periods where I've made some good money, but I've never considered taking it out. It's like everything I've ever made has been like, I want to size up. Sierra Charts has been doing similar stuff. They no longer want to support Rhythmic. They want us to buy their Denali data. Yeah. Well, because they've had a relationship with CQG for a long time and it's CQG Continuum, it really does seem like what they're trying to do is they're just trying to slowly kill off Rhythmic. That seems like what their goal is, their intention or whatever. So it's like if you want and you kind of have to wonder, like I think for Jigsaw in particular, okay, and I guarantee it, like Peter is not thinking about this at this time at all. So don't think that this is like, oh, I got some hint or something like that. I'm almost positive that it's not something that's on their radar. But with the way that things are going, you kind of have to wonder if at some point it will have to be, right? Like at some point they'll have to say, well, maybe we should just become our own brokerage too. So Brenda, have to wait for the check in the mail, actually put on your pants and drive to deposit the check, wait for it to clear like it's 1990. Yeah. Goldman Sachs Hatzius predicts no Fed hike next year as growth slows. That's significant. That guy knows his shit. Will we get a situation where they taper but they don't raise rates? I think that we could get into that kind of an area, or we could get into that kind of an area where they taper and then like something else bad happens next year, and so then they bring the QE back. So Michael J. Berry is posting some stuff, and he's quoting Goldman. We expect the equity market will continue to rally as investors gain confidence that the current pace of inflation is transitory. JP Morgan says weakness after 330 days of no greater than 5% pullback, but we don't expect it to last and advise to buy into the dip. Yeah, I'm listening to Financial Juice too. Oh, I didn't hear that come out for Financial Juice. That was just on Twitter. You know, I forgot about the tick strike thing. They were asking about tick strike. I know a lot of you guys were interested in it, and I just didn't hear from them again. I should follow up on that today. Anyways, I'm sitting here thinking like there's something else I wanted to talk about or that I wanted to do, and I just can't put a finger on what. Oh, you know what? I got over to try and download TensorFlow, and I was not what I expected. Price squawk drove you nuts? Wouldn't surprise me. I mean, I have my own notifications that you notice that hardly any of them have come through today, by the way. Yeah. CNN, if you hoped grocery stores this fall and winter would look like they did in the before times with limitless options stretching out before you in snack, drink, candy, and frozen foods aisles, get ready for some disappointing news. Wild market only one way. Well, but it's like, think about it. If there's no banks out there, then who's gonna sell it? You know? If it's all just retail traders, then yeah, of course they're gonna buy it. Who's buying? That's got to be the retail traders, you'd think. I don't know. Suppose it could be options people too. Yeah. Oh, there you go. Captain Price was thinking the same thing. Agreed. I was long ES earlier. This move up hasn't had much size throwing back at it. Low volume. Yeah. Yeah, exactly. So, I don't know. I want to write something where I combine Ace's old entry strategy with Jay's strategy, but use J as a filter rather. Use J as a filter and use Ace's entries. But then instead of using Ace's entry, use a super smooth moving average. See how that does. Shatner on spaceflight. I feel comfortable, but I'm also uncomfortable. Okay. Something happened in the Bitcoin market here. Well, the way they're talking, you would think that, but no. They're gonna kill. No, not, I hope not. Oh, that would be the most ironic thing ever if he died. That would be like, oh my gosh. If William Shatner died today on his space flight, that would be news for like the next year. That would be enough to get them to forget about the pandemic, right? You're trying to find a place to get along? Yeah, I kind of feel like it's a little bit late because we're already to like first deviation based on options. So when you look at how far do our options pricing that the S&P 500 could move in a single day, we basically did it already. That said, my robot is still in. I don't know. I can't believe that this right here wasn't enough to get him out, but he should probably be getting out now. But I mean, when I say probably, like if I was discretionarily doing it, I would get him out right now. But he's just going to hold it. Can you explain what you meant by options deviation? Okay, so I have a thread, or I have a video on this channel about using expected moves with the VIX. That goes into more detail about it. But the gist of it is this. If you go into trading view, and I have an indicator called VIX range estimate that you put on your chart. And what it does is it says, this is the value of the VIX, and this is the value of the S&P 500. And the S&P 500 is likely to move a certain percentage of the VIX each day. I forget what is it? 0.5. No, 16. Yeah. Okay. So it's like the VIX divided by 16 times the S&P 500 open. essentially is what it is. Okay. And you notice, so for them to go beyond that it's not unusual, but look at how many times it will go right to it and then turn around. Right. This day right here, if it goes past that second one, that's like crazy, crazy stuff. That was only able to do that in the extended session though. But there, it's the number of times you will see it bounce off of that line is really quite amazing. Right there. Now, I wouldn't try and use it as like, okay, we got to there, so now I'll go short. Like this current situation. Okay, we got up there, so now you should go short. Not. I wouldn't read it like that, because it's not like a predictive measure. It's just that's what the options traders had priced in. The options traders are saying it could move this much. So I need to set my strategies up so that, or what I'm asking for the options needs to be set up so that it can move at least that much on a daily basis, right? That doesn't mean that it will stop or continue or what, but it becomes a really good benchmark, because now you can look at it and you can say, okay, today the S&P 500 is moving more or less than what the options traders expected, right? And ergo, if you get a move that goes as far as the options traders expect for that day, can be a really good opportunity to exit, right? Strong move up, you exit. Now at this point, like going long to expect that we go up to like 44.30, that's based on what options traders are pricing in. That's a little unrealistic of a scenario, right? So that's how we use it. Since we posted that video, I've seen lots of people putting stuff out about it. But I didn't come up with it. That Rich shared that with us. Now, the split side here is that the S&P 500 has not gotten to a point where it was so, the order flow was so overly positive that it was likely to turn. And that's why Jay stays in the trade. So I don't know. Probably there's going to be a pullback here at some point, right? At least to like back to 4,400. So he'll lose some of it. But either way, he's probably going to walk away today with $1,000. That's good. Well, we still got 30 minutes left. It sucks. All of the like programming projects that I want to do are like big projects that I don't really feel like I could do just here on the stream. So we should bracket within the B prints at least until the end of C prints. President Biden tweets, if you haven't been vaccinated yet, please go get vaccinated. Financial Times asks, so would you prefer to spread your core work hours over 7 days rather than between Monday and Friday? No. No, you need days that are completely for other things. leave that on. I'm actually surprised. Normally on a holiday it would be a little bit more sparse in here today, but it's been okay. Oh, but that's the first time I've heard of that since day trading. I missed that. Yeah. I think that if you were doing options, that would probably be a more common thing that they talk about. In futures, one of the things that's really funny is that there are a lot of things that the futures traders don't look at because it's just like not in their face. Like when you really start getting into that sort of a thing, you realize how, okay, like a really good example is I have an indicator that is basically co-integration. Okay, so co-integration, if you're doing you're trading stock pairs, like that's really important. They want to see that these two stocks are closely co-integrated, and then if there's a deviation between them, then they trade on that deviation coming back. But in futures, you don't really do that kind of a thing, because if there's anything that's like co-integrated, they're practically tick for tick. One, but two, like none of the platforms have it built in. And it's quite a complicated calculation, but it is still useful to see, like, is there actually a correlation between these two things? Yeah, it's kind of useful. But futures, you don't see it. It's a lot. It's very compute heavy. So I saw this Linus Tech Tips video on Friday where they got a special, it's kind of like a video card, but it's for doing machine learning calculations instead. So it's really efficient at doing machine learning calculations, and they using that to run their smart home so that their smart home can see like what room you're in and which person is in which room and stuff to adjust the temperature accordingly. Yeah, crazy stuff. And all I'm thinking this whole time is, we should try to trade with it, right? But I need to get into that stuff more. I need to start setting aside some study time each night. I've got a really nice statistics book. Maybe I can do it at that table. I think I need to do it like not at my desk. You know? Well, I tell you what, this is going to be a really slow last 30 minutes to the stream of the way this market is going. Dave Chappelle, if this is what being canceled is like, I love it. Oh, what? Breaking market news. China is reportedly investigating ways and means to declare and sentence crypto activities forever. Well, don't tell the cryptocurrency market that one. What's the bit Chicago guy here? Ooh. Chicago Mercantile Exchange 1998 annual report. I want it. No bids. Add it to my watch list. How does this guy find this stuff? Have you ever seen this Twitter account before? Oh, no. Where is he? Oh, he deleted it. Boo. The Pit Chicago. He posts a lot of interesting things. He put it back up. Always got these nice pictures. Oh, I was watching that documentary. That's funny. Oh yeah, CBOE has a new floor they're gonna open up next summer. Just kind of cool. Oh, I'm just realizing now when he said I think we should bracket within the B prints at least until the end of the C prints. He's talking about the market profile, isn't he? He's saying until the next, we'll bracket in there until the next 30 minutes. Yes. It just dawned on me. I was like, oh, that's what he's talking about. I might be right. Well, generally speaking, when we get into a kind of a situation like we've got right here at 4405, yeah, they'll probably stay there for about 90 minutes. Tends to be what happens. Although I don't know if that one was really like a meta order or if there's another meta order coming in. So it may just probably come back a little bit and then not do much of anything for the rest of the day. I need to move this microphone because I need to be like here. I need to be like way over here to look at the camera when I have my head turned. I had an eBay listing out. Nobody bid on it. $100 is too high. No, I'm sticking with that. I'm sticking with that. I've never seen A prints open drive, then same with B prints, and then see a complete C print reversal unless there's some news. Yeah, well, usually that opening, you're saying that it would drive for the whole first hour and then reverse. Yeah, that doesn't happen. The issue is, I mean, I tell you what, there's something that's like so ridiculously simple, but there's so much edge in it. Is just like, if you can sort this out, it really matters a lot. In fact, I think that this may be one of the things that humans are doing that seems to be hard to program. It could actually be easy to program, but basically there's more activity on the open. Oh, what do you know? It's like if you get your trading done early, it's better. Now I tend to do it just by like limiting the time frame that it takes it, but maybe I should say, okay, you're allowed to take one trade. Well, not one trade, but you're allowed to take trades until like for the first hour, and then you'll hold them after that, but you don't take trades after that, right? I think so. I never left a review on this guy. Leave feedback. That also means that I got this other guy that bought the thing. I don't know if they ever I've always been nervous at my level to trade the apron, too much volume for me to figure it out. Well, but what you can do though is you can trade like 30 minutes before the open, right? When it's a lot quieter. And if you have like a really clear reason why it should be going a certain direction, and very often what you can do is you can catch something that's already gone like a good 10 points, and then you get the open. But like, think of it this way. To predict future price movement, you have to predict future order flow. There is a situation where we can very easily predict at least one property of future order flow, and that is that if we're trading at the very, very beginning of the day, we know that there is going to be a lot of future order flow after us. So the opportunities, the probabilities of us catching a good winner are a lot higher just because of that. So you can get in when it's like really slow, and then you just kind of catch the momentum. Yeah. Predicting future order flow can be a bit tough, though, for me at least. Yes. Well, it is very difficult. But there's what I'm saying. Like, there are kind of little, teeny tiny little tricks, right? Earlier in the day, you are better chance. You know that there's going to be future order flow. If there's a certain piece of news that you're expecting, you know that you're going to get order flow. You know. But sometimes you can also do things like you can look at the options and the sentiment and so forth, and you can predict future order flow off of that. Like, that's the whole thing. Is like most retail traders are all trying to look for technical edges. The market is more statistically efficient than it is informationally efficient. The market is more statistically efficient than it is informationally efficient. Does that make sense? The market is more statistically efficient, meaning it's better at removing any kind of edge that you would be able to find from looking at chart patterns than it is efficient at being able to eliminate something that is based on a piece of information that is out there in the market and is known. And why is that? Well, because the orders haven't come in yet. Essentially, orders move markets. So if you got a piece of information and you know that the orders haven't come through on it yet, it's that simple. You hate the 4,400 number, Greg? we that could be we could be stuck around this area for a long time, huh? Like, given what the economists are saying and everything, we could be chilling at 4,400 for a couple of months. Yeah. Oh, okay. So when I went long today, that was mostly random. So we were coming in and we were. Did you see the spreadsheet? You saw the spreadsheet thing, right? So I was saying here's how you do it: is you want to have a bunch of contracts that are taken off almost immediately to kind of pay for the transaction. And that allows you to let it run. That allows you to set up a situation where your target ends up being closer than your stop. But your stop, if your stop gets hit, you break even. And so I only went long off of markets tend to go up. It's a holiday, so I don't really see any big news or depressed sentiment that would move us down. And the S&P 500 is about to open, so I know that I'm probably going to get my 2 points at least. And that was all that it was. So beyond that, it was just luck. But it was random to kind of show that, well, you'll get certain fills just based off of randomness. You just got to realize that's going to work like 90% of the time. But then when there's like a real reason for the market to go down, you're going to get destroyed. Mm. Oh, you didn't see the spreadsheet? What happens if all? Yeah, that's exactly the problem. That's exactly the problem. Here, I'll pull it up again. Okay, so what I'm doing here is I'm saying, okay, you're going to take 3 lots. They're all going to stop out at 12. Okay. One contract you're going to take off at 10 ticks. You're going to take profits at 10 ticks. The second profit target you're going to take off at 18 ticks. And at that point, you're going to move your stop up. And then you're going to let that last contract ride to a total profit of 20 ticks. But when you look at each leg here, so in the beginning, your target is 10 and your stop is 12. So you have a 55% chance of hitting your first target because the target is closer, right? Once it's moved there, your next target is closer than your stop by quite a lot, 22 and 8, right? It's a lot closer. So that's going to happen almost 74% of the time that you're going to get your second target. And then you can let the last one ride. Because once you've gotten your second target after that point, then you have like an almost 55% chance of getting your last one. So what we're doing is basically for each step, the chances of the next step working out is better than it going back and stopping out. But when you add all of them together, that's this column E right here. If I zoom in, this is what you make. This is like the expectancy. So this is like you lose 45 ticks together on the 3 contracts, 12 times 3, right? Oh, plus the commissions. Plus the commissions. J1 times negative J2 times 3. Anyways. But you times that by 45% probability. So on a probability adjusted basis, you're losing 20 points on that, right? So the overall expectancy of the system ends up being minus 1.5 contracts, right? Which is better than like all of the other ways that I did it. It was like more than 10 or 11 points, right? But what screws you over? Yeah, it's that immediate stop out, because everything else is good, right? This first target, then stop out. That one's a pretty small amount of them, right? So if you're going to do this sort of scale out sort of a strategy, then the real deal is you've got to get something that's really, really likely to get you 10 ticks before it's going to go 12 ticks against you. This is really the long and short of it. So you want to have like some amount of momentum or something like that. But that's all we were trying to show. So I was saying, so when I did the example, to show that, what I did was instead of having 3 contracts, I used like 4 or 5 contracts, and I took those off at a closer target. That was very close. And then when it came back, I did it again. So it was literally like for them to stop me out, they had to go like twice as far as where my target was. Ended up not mattering because we went up anyways. But it's just like this whole thing is like, how much liquidity do they have to go through to stop you out compared to how much liquidity they have to go through for you to hit your target? And you want to put yourself in a situation where you have an advantage on that in some way, where the liquidity you have to go through to fill you is less than the liquidity you have to go through to stop you out. Just realize there's a fat tail to it, right? If there is informed trading out there and they push against you, then you're going to lose more than you make on your win. And in a random market, that's still going to happen enough that it's going to come to break even, at least theoretically speaking. If we go and we backtest this, we set this up in NinjaTrader and backtest it off of like a random entry, like a timed entry or something like that. Go long every day at X time of day. Probably will show that it doesn't have a very good Sharpe ratio. Let's see here. I tried something similar. I found when you averaged your gains, for me it was something like 12 ticks, 20 ticks, 40 ticks. The average came out to like 28 ticks. Oh, right. Well, so what I did was I said, okay, on average you lose this for this leg. On average you lose this for this trade, and then all of them combined, you on average you lose 1.5 ticks, which seems like about what it should be. Like essentially, if you lose the spread, then that's what you're gonna get. So theoretically speaking, if you do this and you use limit orders, you should break even in a completely random market. Oh, with yours, I really needed to be right on the last contract for that strategy to work. Yeah, well, on this one, it was 23% of the time it actually worked out. Like, that's the thing is, I think that if I traded this, I think I can get that full win more than 23% of the time. I think I could get that full win maybe almost 30% of the time. In fact, my own chat stats kind of suggest that I can get that. So, especially if I'm going long on ES. So, I don't know. It kind of helps. But it seems to me, though, that like you make more on all in, all out. Like, it's really, really what it's helping. It's really more of like a mental thing that it helps you than more than anything. Like if I just take one contract randomly, 8 ticks, 8 tick target, 8 tick stop, right? On average, I should come out break even. If it's random. And I'll just lose the spread. Yeah. So if I'm able to get the most efficient and it gives me, I lose 1.5, that's about right. You need real edge for it to work though. And the issue is that if you don't have a real edge on it going to that first target, that's the problem. It's really the first target that's more of a problem than this one running, I think. Oh, that's right. Can you hear the little siren in the background? I got Asher a little police car. It makes that sound. Oh, you made 2 ticks off of that? Oh, only 2. Well, that shows you how crazy. After our last conversation, I focused on the dominant times and cells, and it seems to be working for me now. Oh, good. Isn't it weird, though? Like, you know, especially when you consider, like, what I'm looking at doesn't necessarily, like, predict what's going to happen. But, like, just if you understand what you're seeing in liquidity, you intuitively will kind of pull a little bit of it. It's not like a huge thing. I think it would be awfully hard to trade off of just that unless you were really big, right? That's actually one way that's really great to think about it and even to try. Is like go into Sim and say, I'm allowed to use 100 contracts, but I have to scale in and I have to scale out. Like I can only do 1 contract at a time. And then you think about, okay, well, if I'm going to do that, like what I want to do is I want to say, let's say I think it's going to rotate around 4405. Then I'm going to add a bunch of contracts between 4405 and say 4400 perhaps, right? Because I think that's where it's going to rotate back and forth. All of them might not get filled. And there's certainly going to be a point at which I say, okay, I've filled more contracts than I should have. Or like, that's too strong of order flow against me. I need to puke and flip around, right? Now you start to think about like the way that a market maker has to think. And all of a sudden you're starting to think about things like your position in the queue and how many orders there are ahead of you and all that sort of a thing. I am maybe next week or the week after. Oh man, I wanted to have a video out today and I went and recorded it. But I didn't edit it. I didn't have time to edit it. So I think that I will have time to get that out for next Monday, and then I think we'll start making some order flow videos, I hope. Those will be harder. What do you mean by too strong of order flow against you and what the market maker is thinking? Well, like, let's just say, for instance, that you were long 100 contracts right now. And then all of a sudden, 1,000 orders came in and pushed us below 4,400. You know, that would be an extreme example. You would immediately be thinking, whoa, something happened, right? Was there a piece of news? Did news release something like that? Somebody knows something, right? Like at what point, how much volume can you have against you before you say, this can't be random? Like this has to be the result of somebody knowing a piece of information that I don't, essentially, right? That's basically the way that it works. Is like the market making strategy, you will make the spread on average, except for if there's informed trading against you. So there's a model, really started with the Kyle model, and then this is Albert Kyle, 1985 is the study that you would look up. Albert Kyle, 1985. And he describes the model that you would use to determine when there's enough order flow against you that you need to start pulling your bids or offers or whatever it is. And then you can kind of start reading the flow to think, okay, so now I'm looking at the offers that are coming in and pulling off and the market orders that are coming in and determining what the market maker and the regular traders are doing here.
Okay, well, off of the open, there was good, 10,000 contracts buying there. That's clearly a large buy meta order. And then it came up to 44.05 and there was some big trades and kind of like slowed down, and you could see the lack of latent liquidity there. That kind of suggests that they reached their end, and then you didn't really see anything that really suggested that the buyer really had a lot more to buy. So you kind of have to assume that it's going to pull back a little bit. Versus like these other, because that's why I say always watch for pulling, man. The amount that's on there versus how much actually trades is really, really important. Your Vista chart doesn't show you that. The only way you can watch that is watching it as it trades, And when I get to a spot where more trades there than what was on the bid or offer, I mean, that's important too. But those are that's kind of more of like an unusual situation. Oh, it's 9:03. I guess it's time for me to get going, guys. I knew I was missing something. Isn't 10K pretty off the open? Yeah, I guess it is pretty normal. There was never really a very strong selling off of it though. Anyways, I gotta get going. Hey, I will see you guys tomorrow. In the meantime, stay profitable, friends.